Hi everyone, and welcome to our discussion on the future of collections in lending, exploring how embedded payments and automation has transformed managing the fund flow for lenders. I'm Gavin Waddell, and I'm Modulr's strategic lead for lending and today's host. Today we'll be exploring the role embedded payments and automation has on the industry, how it creates more certainty in managing loan repayments, optimizing customer experience, and unlocking new opportunity for lenders. Our discussion should take about 30 minutes, and today I'm joined by James Hubar, Senior Product Manager at Liberis, and Sunil Dial, Commercial Director at multifi. James and Sunil both bring a wealth of knowledge about the lending industry, along with their expertise in utilising embedded payments and automation in their businesses. James, would you like to introduce yourself?
Yeah, for sure. I'm James Huber, Senior Product Manager at Liberis. And Liberis, simply put, we make it really easy for small businesses in the UK and globally to get access to financing that they need to thrive and grow. And we do that by working with really any company that works with small businesses. So it could be payment processors, e-commerce platforms, marketplaces, neobanks. We partner with them and white label our financial offering and make it look like they're the ones offering these financial products for their small business customers. And I specifically focus on payments, which is how we've come to work so closely with Modulr.
Fantastic. And Sunil?
Sunil. I'm Commercial Director at multifi. multifi are what we call an SME lender, so small, medium businesses in the UK. And we provide sort of working capital facilities for them and looking to support the UK growth, basically. And we use open banking data and our partners to actually kind of formulate and build our roadmap to support the businesses.
Fantastic, thanks. And Sunil, I'll stick with you for the first question. Now, in what ways has the landscape changed for lenders in recent years?
Hugely. I think we're all used to the sort of traditional methods with regards to lending. So it's looking at basic things like financial statements and management information. And that has worked to some extent historically. What we've seen in the last few years is with the use of open banking and data analytics with regards to that, we can see a lot more insight, a lot more real-time insight. And that's really helping lenders like us and others build more customer-centric products, manage our risk more effectively, and ultimately, obviously, become more profitable so we could reinvest back into our sort of roadmap to how we could support businesses.
Fantastic. Anything to add there, James?
Yeah, I just add taking a more 30,000-foot view. If kind of the first wave was, okay, we can have alternative lending outside. You don't need to walk into your high street bank to get a loan or other financial product. And now we've really seen the acceleration of embedded finance and embedded lending. So it's not just the banks that can do the lending, but really anyone that works with SMEs, particularly if they see revenue data or process payments, and they have really rich insights that either allow them or other companies like us to be able to provide more personalized financial product offerings.
I think that's very key, actually, accessibility now to finance. And from a lending perspective, it was historically you had a set of products that you go for a loan or a mortgage or an overdraft. I think now what we're seeing is a lot more innovation coming into that, and that's opening up the opportunities now for a lot more businesses to get access to sort of financing to help them in regards to that. So that's, I think, a really important point.
Yeah, and it's a big selling point. So we work with what we call partners to be able to provide these financial products. And what's really important to our partners is the acceptance rate that we can offer to their small business customers, because traditionally those small businesses, they always get declined when they're trying to get financing. And so kind of the shift that we're seeing is enabling higher acceptance rates, which is really important to our partners, and then ultimately it's important for those small businesses. So they're getting like 70-80% approvals instead of 70-80% declines.
Fantastic. And clearly, I suppose part of that and part of these advantages that you're talking about are very driven by specialist lenders like yourselves and alternative lenders. I mean, perhaps, Sunil, in terms of the role that non-bank lenders have have had in transforming the industry. Perhaps could you talk about that for just a moment?
Yeah, I mean, we're in a fortunate position in the sense we haven't got any legacy systems and platforms that kind of stop the sort of growth or innovative aspect of how we look to build products to the market. And I think as a sort of a specialist lender within there, we've helped, I suppose, have more sort of customer-focused products or listen to the customers more. We're able to make a lot more real-time decisions now as before, so there's no delay in the process. Like when you're used to apply for a loan, for example, you wait 4 or 5 days. We can make instant decisions now. So I think it's helped with the pace of how we were able to respond to our customers. Going back into what you were just saying just now, looking at the data to provide them sort of better solutions that work better for them and not try to make products fit their sort of operating cycle or their working cycle. So we're seeing a lot more collaboration as well. I think you mentioned that, and you work with a lot of partners. We're also working with a lot of partners because our legacy system, we haven't got legacy systems. So whatever we're developing is focused on how can we integrate or how can we work with the best in class that could be better for our customers. So looking for partners that have something that we might like to do, but we know they do it better. We could actually bring that into now our operating model and go, actually, can that work better for our customers? Can we plug it in? Yeah. Can we provide them a solution? I think we're seeing a lot more collaboration now within the industry.
Yeah, fantastic. And are you guys seeing similar or anything to add to that, James?
Yeah, what I just add is with banks, they're trying to do loads of different things, and often it's not profitable for them, or it's so difficult that it's not profitable for them to serve small businesses. But that's where different specialist lenders that say, for example, we've been doing this for 17 years, and so we have 17 years of underwriting data on small businesses that we can really access, provide tailored offers, like you said, being able to provide instant decisions. I think we've come such a long ways that now customers, small businesses expect to be able to apply and receive an offer and then receive money hitting their bank account in a day or two. But only 5-10 years ago, the experience was it would take a week to apply. You'd have to another week to work with your accountant to get your bank statements. The bank would take forever to process that, and then only at the end of that would you get declined. And so it's been really, really cool to see the process, particularly with some of the innovation in Europe, honestly way ahead of my country, the US, in terms of regulation really spurring a lot of innovation in the payment space and the speed at which money can move around. So just in terms of actually being able to get money to customers much more quickly.
Yeah.
I think James mentioned regulatory requirements have hugely changed. I think financial services in the UK have had, I think, around the world, have a bad stigma over the last few years. I think so. We've seen tighter regulatory requirements, tighter compliance requirements, and now with the data analytics we're seeing, what we're utilising now as lenders, we're able to lend more responsibly.
Yeah.
And we have to back that up with why are we lending. I think I know we've got all the data, we could prove that. So I think that's a huge change in the last few years, and I think obviously, and I think technology has helped enable that.
Yeah, no, absolutely. So I think it's very clear that the specialist lenders in the market are really filling the gaps that banks are leaving in terms of being able to have a better underwriting process, more appropriate to the businesses that you might want to lend to, and then getting cash in the bank much quicker for these small businesses. And I suppose probably just as important, more important is making sure that you get repaid.
Yeah.
Because you can lend all you like, but if you don't get repaid, then it's not a great situation. Now, in terms of managing collections, Sunil, can you talk just about kind of what the impact kind of defaults have on lenders and potentially borrowers as well?
Yeah, I mean, unfortunately, it's comes with the territory. You will, no matter how well you lend and your procedures, you will have defaults. It's how you mitigate that and how you manage that risk ongoing. I think obviously defaults on a lender or within the industry has a huge impact in the sense that it's a bad debt. It could affect you as a business, your profit. the more bad debts you have, or defaults you have, the more provisions you have to make as a business that affects your profitability, the more resources you need to put behind it to kind of get the sort of the bad debts repaid. So it becomes a very costly. Ultimately, it leads to a sort of a reputational risk within it. So those are areas that, as a lender, those are the kind of consequences that we face. But now we're able to try and mitigate that regards to using open banking data, monitoring our risk ongoing, it's real-time information we're receiving all the time. And that can help us not necessarily just to go and say that's going to be a default, but actually help with customers earlier in the process. If we do see sort of behavioral changes from the data we're receiving and utilizing, we could just reach out to the customers, have a conversation and go, well, actually, how can we support you without getting to that stage and going, hey, we can't repay this loan or this facility. We're more proactive in supporting the customers now.
Yeah, no, fantastic. And James, do you have anything to add to that?
I think what I just add is from kind of our perspectives, ultimately, we need to have access to lending facilities to then lend out to our small and medium-sized businesses. And previously, when interest rates were really low, it was pretty, we could get good rates and then be able to kind of pass along some of those cost savings in the form of lower prices to our customers. But now when interest rates are higher, it just puts a lot more pressure on that. And then it puts even more scrutiny on defaults. And if we then want to be able to access more money to lend to more customers, if we have, a high default rate, it just makes it even harder for us to be able to get additional lending facilities, or those lending facilities will come at higher cost to us, which ultimately, why does this matter? Ultimately, we want to be able to provide, financing, and we specialize in business cash advances at as low of a cost to our small businesses as possible. And so a big part of that is mitigating the write-offs and defaults.
Yeah, absolutely. And so we've talked a little bit around how specialist lenders can have better processes in place for assessing, paying out, collecting money. And I think compared to the more traditional banks that might have been historically kind of trying to lend to these businesses, now there's also a part of the process that relates to payments where historically lenders will have had to rely on traditional banks. Now, in terms of the services that lenders might be getting from traditional banks in the context of payments, has the services they've been able to get held lenders back?
From a traditional bank?
Yeah.
In a sense, yeah, because it goes back to accessibility, being able to, have automated repayments, set that up. That was something in regards to the legacy system, the platforms you weren't able to do at the traditional banks. So we're now able, we have implemented sort of automated payments. We're able now to take that in, look at the behaviors of the repayments, and that really helps us kind of build our roadmap and going, right, how can we fine tune our offering to those customers and actually mitigate our own sort of risk internally and what we're seeing. But that gives us sort of the comfort and I'd say kind of the satisfaction knowing that we have this cycle that's automated. We have things like alerts going out, notifications going out, which is all automated as well. It's not, we don't need to employ sort of operational headcount just to do that. It's now all built into the platform and the system.
And would you be able to do that today by relying on traditional banks?
Very difficult, because you're talking about, use the term reverse engineering a legacy system or platform just to allow those features and build in that sort of analytics and data into it. It can happen, but it will take a longer time to do so, and costly as well.
Fantastic. And James, you talked about how Liberis embed their product within the platforms of others, and in the world of kind of embedded finance and perhaps specifically in embedded payments. Are you able to talk at all about how Liberis might have leveraged embedded payments to help transform the services that you offer?
Yeah, definitely. And we are slightly not traditional in the way that we embed it, but the reason for that is we try and provide as seamless of a process as possible for our end customer, these small businesses. And we essentially want the payments process for them to be invisible. We've had one customer testimonial use the word like invisible or sneaky payments, which I like because they don't even need to touch or set anything up. We are able to use you guys to set them up with what we call a settlement account or a virtual account. And so while they're paying back their cash advance, money just routes through there. We're able to use your automated split rules engine, so that's the embedded part. And from there, we really seamlessly, or the way that small businesses pay back their cash advance is just as a percentage of their daily sales. And so they love that because it provides them with flexibility where, in the months after the Christmas holidays, usually the revenue is lower, and so they don't have to pay back as much. If it's business is booming around the holidays or the summer, they pay back a little bit quicker, but they don't have to worry or touch that at all. They at the time we disperse financing them, they acknowledge they're doing this. They sign a contract, but then it's super embedded. They don't have to worry about it. It all just happens automatically, and so that's really key for us to provide a good customer experience for them.
I think we've talked a bit around how embedded payments can really help optimize or improve the customer experience and delivered by a few features of it. But I suppose as well as the customer experience, does it help, and perhaps the automation, the different methods in which you can collect, does it help with the certainty of getting the collection as well?
It does, because we see the behaviors which we were never able to see before if you talk about traditional lending. So, we spoke about earlier the real-time trends that we're seeing within how a customer operates within their bank accounts or through open banking. That really helps us going, well, actually, understand the business better as well, in a sense that it's a seasonal business. They might have, you mentioned, like peaks and troughs of where they do really well. And so we could adjust to how we support them, how we manage our risk internally as well, in regards to positioning, being a responsible lender and positioning the right sort of facility for that customer as well. So it's a huge part. It saves us a lot on regards to operational costs as well. Sort of traditional lenders will have teams and teams and teams of individuals reviewing loan statistics, etc. They'll be requesting management information from these customers. We don't need to do any of that anymore. We could extract that information, and we could put it into a model, and we could look at it and actually have better, insightful decision making.
Fantastic. And James, do you have anything to add to?
Yeah, on our side, and I can use some specific figures. We have or had a few different ways of collecting payment in the past, and we saw default rates that were 25% higher when we were not using Modulr to automate our collections process. And so when we can actually measure that difference, that provides a lot of certainty for our finance team. Also, in terms of operational planning, it means that we can expand with more certainty into new markets. And I can't announce it yet, but in about a week or two, we're going to expand into a really big new European market, leveraging Modulr there. So we're really excited there, and not needing to then hire an additional 2 to 3, like you said, people in, say, a finance or operational or collections role just to basically manually chase payments is really crucial. And before, we were outsourcing a team to basically manually load our payments each day into our system. That cost about £10,000 a month. They had a 5% error rate, and it got so bad that the team that we outsourced to save money and time had such a high error rate that our internal full-time team ended up needing to check their work, which totally defeated the purpose of outsourcing. But by then automating our collections process with Modulr, we didn't need to pay for that anymore, and decreased our error rate to less than 1%. So very measurable differences that are ultimately our CFO really cares about.
Yeah, no, that's fantastic, and it's great to see how it's contributed to the bottom line for Liberis. And so we've talked a bit around how perhaps it used to be, how the traditional how alternative specialist lenders have, with the help of embedded payments, upset the kind of status quo.
Yeah.
But I suppose there's still plenty more innovation that can happen. James, I'll go to you. What do you feel the future looks like for lenders?
I think so. I'll have my product lens on it, or thinking about what we can offer to our customers in particular. And one thing that makes me excited is just given some of the enhancements that we're seeing in payments, is can we offer our small business customers even more flexibility with how they pay back? They already have flexibility with it just being a percentage of their revenue, but could we give them the ability to, or using like forecasting their revenue and then even adjust the revenue automatically in terms of how they pay back, or give them the ability to adjust that percentage at which they pay back? Could we give them the ability to pause payments and then resume it back on? Let's say if they're a loyal customer, and I'll have that be super seamless. So that's on the, I guess, the front end or the customer facing side. On more of the back end operational side, obviously using AI or machine learning to think about how we be smart about the reconciliation process, because reconciliation is still just a really, really challenging process that takes up a lot of time. So can we be smarter with transaction monitoring using AI there for some of the back end stuff?
Yeah, no, that's fantastic, and it's clear that there's been obviously a lot of change over the last number of years within the space, but a lot more that can still happen with some emerging trends and technology like AI. I mean, Sunil, anything to add from your point of view, perhaps around how any kind of emerging trends and technology could impact lending?
Yeah, I think I totally agree with James in what you were saying there. AI is going to be important on both ends, actually, the front end and the back end. I mean, if I look at us and multifi's journey, if I'm perfectly honest and transparent, we had a roadmap that entailed one product. Our core lending product is what we do now. But what I'm seeing and we've actually excelled our roadmap now to the extent that through working with yourselves and partners, we're now able to produce or create other products now. So we've got 2 more products that we're coming to market soon. That wouldn't have been possible before. And I see that being a trend within the industry. We're going to see a lot more product development, but simplified products in a way that the end user could actually understand it clearly. You know, what is this facility? Oh, it's that simple. That's what I'm using it for. And I think it's been the UK market, UK small medium businesses, they've been crying out for that. You know, they are busy people. You know, they are every day they are focusing on what they want to grow their business. They want to that's what they want to focus on. They don't want to spend time trying to understand what kind of lending product they need and needing to be an expert almost to try and understand that, right? So I think we'll see a lot more simplification in regards to products going forwards. I think we'll see a lot more collaboration going forwards as well. So utilizing best of sort of breed products from other providers, put that into your offering to the customer. And I do think you'll see a lot more efficiency in regards to the back end as well. The AI, utilizing that, you mentioned reconciliations, looking at the data, behavioral traits, things like that. I think that will have a huge impact. So I don't know if you will still, in the future, we'll see big traditional banks with thousands of people there. I think you'll see more efficient sort of vehicles now that are working in tandem with others to provide a solution, but equally, if not more so, more powerful and innovative than they have been.
And that's a super good point, what you were saying around there's almost a risk of overwhelming small businesses with too many financial products. And unlike, say, a large corporate that might have a team that can devote a lot of time to figuring out, all right, what exact kind of financing is right for me. At the SME level, they don't have the expertise or time or headcount to do that, and so it's really important for lenders like ourselves, really any company that works with small businesses, to be able to personalize the right offer, so the right financial product through the right distribution channel at the right time, to make it so that the small business doesn't need to sift through loads of websites or community boards to figure out what kind of financial product is right for them. And ultimately, whoever can do this in a good way will earn the trust of those small businesses. And we work a lot with platforms and marketplaces that are always trying to increase their wallet share of those small businesses. And this is a really big value prop for them if they can say like, hey, if you stick with us, we will kind of personalize this offer for you. It's a really strong value proposition.
I think building on that, actually, sorry to jump back in, I think wouldn't it be great if you're a small, medium business, you know, you haven't had the benefit of working in banking and financial services to understand products, quite simply type in what you need. You know, I need to buy stock in this country, etc., and you get a nice, easy solution presented back to you. I think that will be so. I think we're seeing that now, going out in the market. So I think that will be a key thing, but also diversification. So what I mean that lenders in the UK, I can see them diversifying not only to be lenders, with the data and with the partners they're working with, like we are now, is can we offer our customers more than just a lending product? Are there anything else that a business will come to us for, but don't have to go anywhere else? They could get everything in one shop. So, almost like business in a box sort of solution. I could see a lot more sort of innovation that way from lenders as well.
So that brings us to the end of today's discussion. For lenders today, the impact of embedded payments and automation is paramount, enabling lenders to understand their customer behaviours, have real-time information to make quick decisions, and ultimately build more customer-centric products. If you want to learn more about Modulr and how we can drive innovation in your lending business, then visit our website. A big thank you to both James from Liberis and Sunil from multifi for sharing their insights, and thank you all for watching.